Today we're going to explore an experimental indicator that made 150 millions and an 80% annual return for 4 years, according to its creator. But considering that I'm usually skeptical about profit claims, I decided to turn that indicator into a strategy script ready for backtesting. And here is what I found. A short interesting story is that this indicator was invented back in 1983 by a guy named Richard Dennis. Richard decided to do an experiment. He recruited about 15 traders called turtles out of the 1,000 that applies through a questionnaire, and he was so confident about this strategy that he decided to fund them with his own money. The result was that the traders trained by Richard earned more than 150 millions in just 4 years. But let's go into practice and see how this strategy works. Let's type turtle trade channel and open this one. By opening the documentation of the indicator, we can see a brief explanation about the strategy. You can go and watch it, but just to recap the overall rules, this is a trend following strategy, but in reality is based on breakout. In fact, here, as you can see, there are two lines, upper line and the lower line. These lines are the same as the downchain channel, and that indicator is based on the highest highs of the previous X candles and the lowest low of the previous X candles. As the price makes a new high, the upper line will follow. Same applies for the lowest line. So we are in uptrend when the price is above the lowest line, the red line, whereas we are in a downtrend when the price is below this red line. As the creator of this indicator explained in this briefly explanation, the original entry rules are really simple. We go long when the high is equal or above previous 20 candles high, whereas we go short when the price is equal or below the previous 20 candles low. Same approach as the downchain channel, whereas we exit the position when the prices touch the exit line, and it is represented by these blue dots. As you can see, there are these labels, so it's really simple to understand. Long entry, exit long, but let's see some example on the chart. As you can see from our strategy indicator, here we have the turtle settings. So the entry length will calculate for the long position the highest high of the previous 20 candles, whereas the exit length will calculate the previous 10 lowest low, and it's represented by these blue dots. If you want a cleaner chart, you can choose to remove entry and exit labels. You can remove these background colors, and you can even choose to remove all these indicators plot in just one button. As you can see, we have a long entry signal when the price breaks the previous 20 high, as you can see in this example. Whereas here we have an exit long, low touch these dots, and we have an exit for our long position. Whereas for a short side, we have a short signal right here. In fact, the price breaks the lowest low of the previous 20 bars, as you can see here. Whereas we exit a short position when the price breaks these blue dots. Now we are exiting our trades based on condition. So that means that we will exit whenever there is the exit short or exit long. But if you want to exit based on these settings below, you can change from condition to position custom. Whereas if you just want to set buy and sell, we will always be in the market and we will open a long position when a long signal is generated, and we will close that long position by opening another short position. So the classical buy and sell indicator. We will always be in the market and there is no risk management apply. This is just pure buy and sell signals. So these are the rules of the strategy script. They are really simple. And now let's jump into backtest results. The original strategy suggests to set the initial stop loss as a 2x ATR from the opening price. I did backtest only on buy and sell approach, but considering that this indicator would be free, you can get access by joining my Discord server, which you can find the link in the description down below. You can set ATR stop loss and set here multiply by 2. And so if you set here condition ATR stop loss multiply by 2, then you will have the exactly original system as the turtle trade channel indicator suggests. Anyway, I didn't use this kind of settings, but instead I just used buy and sell exit type. Basically, I just leave the default settings, so 20, exit length, it doesn't matter because I didn't use condition, 0.06% commission as always, order size $10,000 with a fixed amount, 1x leverage, so 0 leverage. Let's see the backtest results. As you can see guys, the equity is pretty decent. We have 331% net profit, 151 total closed trades, 39% win rate, 1.79 profit factor, 19% max drawdown, 2.2% average trade. Net profit / drawdown 6.44, which is really high. Daily profit 0.35%. max win row 6, max loss row 7, a risk reward of 2.8, which is really high. Considering that there is no risk management applied, so there is no stop loss and neither take profit, so you can have surprise both for the downside and for the upside. And in fact here we have a max win trade of 50%, which is really huge surprise, but of course it could have been even for a downside. So a max loss trade 50 and a max loss trade 15, so it's a thing to consider. So the equity is not really good, but in my opinion this average trade is really good. This backtest was done on FIL/USDT 4-hour time frame on Bybit exchange. I've done another backtest always based on buy and sell signals on a Rune USDT 30 minutes time frame on Bybit exchange. Basically I leave the same settings, so entry length 20, order size $10,000 with a fixed amount, 2x leverage, commission 0.6%, exit type buy and sell. And as you can see guys, the equity is completely different because of almost 10 times the trades, 1,143 trades, which is a really high number, but now we are going buy and sell on a 30 minutes time frame, so it's reasonable to have a greater number of trades. Net profit 975%, win rate 39.28%, profit factor 1.32, max drawdown 28%, average trade 0.43%. We have a net profit/drawdown, which is even higher than previous backtest, 1.25% daily profit, max win row 7, max loss row 9, risk reward 2.04, average win 8.92, average loss 4.36%, max win trade 106%, max loss trade 50%. So of course, these values are calculated on initial capital and we are leveraging by 2x. But anyway, in my opinion, the average trade is quite low. Max drawdown is high as well, even though it's compensated by this high net profit. In fact, the net profit/drawdown is even higher than previous backtests. Anyway, I found this backtest quite interesting because of the net profit/drawdown and the risk-reward ratio. But probably it could be interesting to set some risk management or use the original settings as the creator of this indicator suggests. This indicator is one of the most popular indicators on TradingView, and if you want to see some backtests on the top 1 indicator on TradingView, you can see this video right here.